Cool. Let's kick off today's session. So welcome everyone to this episode of Build Beyond, hosted by Checkout.com. The title of today's session is The New State of Retail and How Digital Payments Are Driving Business Model Innovations. Firstly, a bit of background for those of you who are new to Build Beyond, and this is one of the first times you joined. Last year, Checkout launched a series of webinars aimed at bringing together a targeted group of senior e-commerce and product execs to explore topics within e-commerce and payments, and really, explore how we can build beyond 2020 and the way we come out of it. So out of the crisis from last year. This episode will look at how retail has evolved, particularly over the last year, and how digital payments are driving innovation. My name is Moshe Weingarten. I head up commercial here at Checkout.com for the UK and Ireland, and been about payments for about 15 years or so in various organizations. For those of you who aren't familiar with Checkout.com, we are a global end-to-end full stack payment solution. We work with up and coming and kind of disruptive brands globally across retail, fintech, service, and food and industry and retail sectors. Names like Grab, Careem, Revolut, TransferWise, and we work with our clients at a global scale to help them understand the payments flows, how they can optimize them, how they can really leverage them to build on their customer experience and drive revenues for their businesses. Just before I introduce my speakers today, I wanted to share with you that we've launched a retail report just recently. We have views from over 10,000 consumers and 500 senior execs in the retail industry, and we're going to discuss some of the findings of that report today. And if you want to download it, it's available at our website. So over to our speakers. Deepak, do you want to give a little introduction to yourself and background to BigCommerce?
Great. But first of all, I just wanted to thank Checkout.com and you, Moshe, for inviting me over. I'm very passionate about what's going to be the next future of payments and retail will look like, right? So quick introduction. My name is Deepak Anand. I'm the Senior Director, Commercial Partnerships at BigCommerce, and I look after the entire EMEA region. And we are the leading open SaaS e-commerce platform, and we give you the entire flexibility with the APIs, and we work very closely with Checkout.com. Some of the brands who are using our technologies are Molton Brown, Procter & Gamble, Cafe Nero, and Skull Candy, and we have 60,000 plus brands. So I think what is more interesting about that report, Moshe, from my perspective, and I read it, is that you've done the research from the real retailers and just to understand what do they think about payments. Because I think from my perspective, as we discussed earlier on, payment is not anymore a commodity, it's an experience, right? And that report gives you that understanding that how do you need to think about payments going forward? And also you need to have the right technology for that, right? So I'm really excited about
Absolutely.
it, and I'm really excited about next Vision 2030 with you and how exactly we can build together.
Thanks, Deepak. That's awesome. And yeah, I think to hear more about that from a real merchant perspective, Christoph, do you want to give a little introduction to yourself and Chrono24, and more interestingly about your role there and your title, because I think it's going to be interesting to understand.
Yeah, thanks a lot, and thanks for having me. It's a young journey together with Checkout.com, so it's so far a promising one, and it's the first here today. And Chrono24, we are a global marketplace for watches. So this already brings one challenge. We are not a usual merchant. We are a marketplace, and we are currently listing like 500,000 items on our platform, and offer this to more than 100 countries all over the world. And yeah, my role, I'm with Chrono24 now for a bit more than 7 years. I'm heading the transaction products team in product management. Therefore, we kind of build up the transaction process on the platform, but mostly are responsible now for for the infrastructure, that is not only the payment infrastructure, but also fraud prevention features and the connected billing and invoicing systems for finance internally.
Kind of all end to end, including fraud and risk. That's awesome, but it's really good to understand. So you can grill me on some things which I think are probably a hell of a lot more about than me. So thank you very much, guys, for joining. Excited to have you here. For those of you who kind of dialed in and listening, I very much encourage you guys to kind of pop any questions you have in the chat. Let's make this interactive. If there's topics you want to discuss, then just put it through. Don't worry about what we're speaking about. I'll try and incorporate those questions in. So if you're joining us, it'd be great to talk about things that you want to hear about as well. And I'll probably remind you and prompt you a few times throughout the conversation to do that. Right. So if just looking back at the last year, 2020 was a crazy year. We're still not out of the pandemic. It's had impacted everyone's lives globally. A lot of people have been very negative. It's been very hard on people. But obviously, one sector where there's been a massive boost from it is obviously in the world of e-commerce. People worldwide were locked down. People couldn't go to the shops as usual. There were constraints, and so that's obviously had a massive knock-on effect in the world of e-commerce. I think our research found that 96% of consumers in the UK and Europe shopped online during the pandemic in 2020, and that's up from 60% in 2019. So that's an incredible extra, like 50% plus consumers now moving online. And what's interesting is, especially here out in the UK, I mean, obviously each country is coming out of lockdown at its own time, but there's a lot of analysts going, well, hey, is this growth going to continue? Is it going to drop off? Are we actually going to see a reduction now that the real shops, the real world shops are opening? What does it mean? Is it going to kind of flatten off, drop, or continue at the current rate of growth? From our research, we've had a response from the consumer panel. Kind of about 74% are saying that they've got no intention of significantly reducing the online shopping. So now they've done it. They're going to continue there. But I'm kind of really curious to hear, Christoph, from your perspective. Obviously, you've seen a lot of new consumers come online. What do you think's going to happen? I mean, and you've seen certain markets as stores have opened up. Has it been a drop off? Is it just has it flattened out at the current rate, or is it continuing to grow?
That's a good question, but we just recently saw a slight reduction of the craziness of the last couple of months, because in fact it was and still is a very bad time, but we are seeing good numbers in that time. One thing is important to know: Chrono24 is a luxury watch marketplace, so we are not really people coming to us are not coming because of the price. We are not probably having the best price in the world, but we have items available. So it's rather the availability. And this was one thing that was lacking in the brick and mortar stores in the last year, because people were not able to go into a store and get their items. And we were well known. Yes, and of course we sold watches before, but now people started buying watches on our platform who previously used us as a as a research platform. And now they figured out, oh, it actually works. I get a watch when I send money. And so we kind of, the trust we promised, they tried it and they realized it's working. And this is why I think this is a sustainable effect, because this is what word of mouth is spreading, that also we are already well known, but this is something that will stay. The people, even in the older target groups, say, hey, it's worth giving it a try, because I don't have to drive around anymore. So that's one very important thing. And yes, we do see a slight reduction, but this is based on the effect that people buying watches in the 5-digit area, they were not lacking this one vacation with the family. They were lacking a lot of wellness and golf weekends probably. And now alternatives are opening up again. You can spend a lot of money for other things as well. So this is not focused on watches anymore. It's distributed to other opportunities.
They don't need retail therapy anymore. They can go.
Maybe, yeah. So, but this is okay. We won't fall back.
No.
Tremendously. So I think it's a sustainable growth we gained through that.
I mean, that's really interesting. And I'd be good to hear your perspectives on that. You know, I hadn't thought about the kind of luxury item and the impact on that, kind of splitting it out within retail between luxury and kind of everyday and kind of essentials, but kind of slightly less high-end goods. Because, you know, I think the kind of everyday shopper, there used to be a thing where you'd go in store to kind of look at something, feel it, but then you'd go on your mobile and online to find the best price and do it, right? Whereas I think in kind of the high-end goods that Chrono24 work with and the watches, historically people would do the research online, but because it was a high ticket, they'd go in store to kind of, you know, get it, you know, exchange money, and now kind of you're seeing, you know, a little bit of return of that, but not much. Now people have the confidence. You say they're like, well, I don't need to go in store to get it because I trust Chrono24 that they're going to get the money.
Exactly.
Crazy.
Yeah, and it was a little joy in a time where delivery of lunch was a highlight beside of pizza. So, you know, getting luxury feeling also through the pandemic,
sure.
Which was available. Yeah.
No, sure. It's really, really interesting to kind of hear from that perspective. And I think, Deepak, from your experience from BigCommerce, obviously you've got retailers across the spectrum. So kind of interesting to hear. You know, so the luxury end, growth is good. The growth, I'm thinking, Christoph, the growth rate is dropping off, but now, you know, the volume is there to stay, and it's not growing as fast as it was last year, right? But you know, from your perspective, Deepak, is it flattening out as well, or is it continuing to skyrocket?
Very, very interesting. This information, the study we have done is that we've also seen a lot of new customers on the platform as well, not from the merchant perspective, also from the consumer perspective. And also would love to find out from Christoph, have they seen that as well? From our perspective, as we are an e-commerce platform, so we work across all the verticals. So we've seen, as you will understand, I built my garden during pandemic, right? So I've ordered so much product from Selco and all these places, so that, you know, because you wouldn't be able to go there and just buy the product. So that home and garden has gone really up. The furnishing has gone really up. All those segments, which is obviously the grocery, has gone really up. So we've seen that on our platform, that the personalized, and also what we have seen is that the personalized experience, right? So I remember doing my using only on the BigCommerce stores, doing my shopping, and I've just seen the difference of all the companies we work with, how they have really changed their messaging on the website during that pandemic time, right? So, and first of all, I just want to make sure that everyone who's listening still following the government guidelines, right? So the pandemic is still not over, and I request everyone just to follow the guidelines, because we have to work together to get to move away from this, and then so that we can have these type of sessions in person rather than
yes.
So
looking forward to that.
So I think we would love to have those type of discussions. So I just request everyone to follow the guidelines so that we can work together and move away from this, whatever we are going through right now. So to answer your question, yes, we have seen an uptake in these type of kind of, especially on these verticals. The luxury side of thing, I have not actually seen it much. We do work with a lot of luxury brands, but what we have seen is that the new consumers are coming on the website, right? New consumers are coming on and buying the product who haven't actually even transacted before. My question to you, I mean, Moshe, because you work across a number of verticals right now, right? So, like, have you seen that? Because in 2019, I've read the study that it's only a 92% penetration. Like, there are still 20% or 80%, 20% of the people still don't transact online, right? Have you seen that gone up significantly? Like now, 99% of the people transact in the UK online, or is it like it's still like in the range of 80 to 85%? right?
No, that's what I was saying. I think it's just an introduction, right? That we saw that jump from 60% to in 2019 to 96% last year. So I think almost everyone's got online. I'm not sure who the 4% are, but that's still haven't tried it. That's across the UK and Europe. So I think UK was probably pretty saturated, but I think going across Europe, it's I think that we saw some interesting stats on the growth in e-commerce across the EU, but then actually when you split it by region, I think there's definitely a bit higher growth in Eastern Europe, and I don't know whether that's just bigger numbers or they were starting from a lower base, but you can see the kind of the pictures, it gets kind of colored in, like all the gaps are now beginning to be filled in. But that's a good segue. Talking about the region, so we talked about kind of the boost in e-commerce and kind of shopping on there. But I think it's interesting where it's coming from. Geographically, merchants. So it's not just merchants going online and selling more stuff, right? But it's those same merchants who might have been online today, now all of a sudden they're consumers in other countries, hitting their website, or consumers in other demographics. And I know, Christoph, let me ask you, from the merchant perspective, is it been more because you guys have been online for ages, right? So it's not you're not one of those retailers who had to who weren't prepared and jumped online. You were there, you were ready. Were you seeing growth geographically from consumers at all over the world, or that was already there and it's more demographically?
I think one thing which is important, we didn't see that huge growth of visitors in general, but I think to describe it better, to convert the researchers into buyers, that was a big effort. And when you mentioned demographics, there are not so many 20-year-old people who might afford a Patek Philippe for like 40 grand, except
Sure.
Football players. But so these are usually people in 40, 50 years and above, and they what we expected is there's not that much expectation or requirement of having fancy payment methods like Apple Pay or Google Pay, and they are not even too familiar with typical payment circumstances like strong customer authentication. Along with the pandemic, there was a PSD2 who made strong customer authentication mandatory. And so what we experienced, that more and more people got familiar with it. So where people from 50 years, 60 years and above previously more and more struggled handling these challenges with a strong customer authentication, they got more familiar with it. We have a good comparison because we were always asking for strong customer authentication due to the transaction values. But meanwhile, we realized that it's not such a burden anymore because they see it on other platforms in even lower prices.
Right, low
That's
values,
the one
yeah.
thing. That's the one thing. But in combination with the pandemic and what Deepak described, they don't only shop at us, also other regions and verticals moved into e-commerce. So they really got familiar with it. And now we see that this is less of a problem than it was like 2 years ago. And we do see some more openness in the audience that we can offer them now the more advanced and fancy payment methods, because right now the usual card payment and the good old regular bank wire is the hot stuff on our platform, and it actually works great. But this is an effect where we do see another kind of uplift.
Cool. I mean, I just want to pick up. You mentioned before, the challenge was converting those researchers into actual customers. Was there anything specific you did, or was it just natural? Right, the pandemic kind of limited their options, and as you mentioned, they got used to kind of the challenges of strong customer authentication from other websites. So, was it kind of natural, kind of force of circumstance, or did you proactively have to do anything?
Now, actually, the options were limited because traveling was not possible anymore.
Right.
And one example, in Britain, watches are way more expensive. So they used to buy watches in Italy or in, but traveling was not possible anymore. So this was one effect. What we actually did is many of our dealers, they have stationary stores as well, and they were struggling big time in the beginning. Sure. So what we did in the beginning, we lowered their fees and motivated them to bring more and more business on the platform, not because of our benefit, but to provide them with a chance to provide more inventory to the platform. Sure. As well. To be very honest, I cannot tell if this was the effect because it went so fast, February, March, April last year, and where we were in the shock situation initially, and oh my God, what will happen through the pandemic? It accelerated like crazy, and it's hard to connect the triggers and the effects, but towards the buyers, there were not too many different campaigns. We were always putting focus on the trust and we're handling things generously. But I think they tried it and they realized it's working. And this is
it's good to know. So you were optimal in any case. There's nothing you need to do. It was just they just needed a little shove to kind of get them to transact. So that's good to understand, Christoph. And
I've got one question for you because you work with them. Again, I'm coming back. Instead of you being a host, I'm becoming a host today. It seems like it. So, like you work with
Go for it.
Chrono24. Did you see because of this, everyone is moving into online payments? How did you manage, especially with the luxury sector, the cybersecurity and the privacy side of things? Right. I mean, that is the biggest question we come across with when we work with these kind of retailers to say, oh, because we work very closely with you and you have end-to-end stack providing all the fraud solutions and all. But the cybersecurity and privacy and the fraud side of things, it's like really relevant for, especially when you talk to Chrono24, and like that's coming up again and again in our conversation, right? So how do you deal with that part?
I think it was it's a good question, but as a kind of purpose-built e-com acquirer, payment processor, we've always been optimized kind of from a fraud risk perspective. I think there are players out there who've struggled, kind of who build a big a platform, a traditional POS and retail aspect where, not to oversimplify, but the world is simpler. You kind of the physical card is present, machine is there. You're often going to do chip and pin, right? There's less aspects to it rather than just checking the card is not lost, stolen. In the e-com world, it's always been a massive challenge for the payment service providers and obviously the merchants themselves who want to be protected. So we were optimized, I think, from inception. But what we did see, I mean, obviously there's strong customer authentication, which Christoph mentioned, which we had in place, for the retailers, as obviously mandated by regulation. We did see more push. Retailers who kind of accelerated bringing that forward before the deadline. So we had that in place for them, and then demand for our a kind of dedicated fraud tool. So there is for merchants with high ticket items like Chrono24. There are more sophisticated tools available, so which we have a purpose-built one in house there, and definitely did see some uplifted interest for merchants looking for that little bit of extra security when dealing with high ticket items. But thanks for that, Deepak. But taking it back, I'm curious from a BigCommerce perspective, right? So we saw online growth go. Was the growth in, besides just in the existing markets, was it new markets, new demographics, everything for you? And if it's new markets, where do you have an idea of where?
Well, I think this is a very good question. This is the really, really good question, because I think we work with clients like La Pola and Walter Brown and all these massive brands, and they are already in the European market, right? They are serving in France, Italy, Netherlands. So what pandemic had done is that they just started opening up a new market. And what was interesting for me to see that whenever we get into the new region, there is a localized payment options. And sometimes we are integrated, sometimes we are not. and you can see the adoption of these payment method in that market is around 60, 70, 90%, right? So this actually has given us an opportunity. I mean, this is why we work very closely with you, because you unlock MENA for us. You unlock some of the key markets for us. We have seen a cross-border transactions has really gone up, right? Because it used to be for some of the brands, it's only 20%, and now it is close to like 40%, right? So,
Yep.
But the most important one, which I always talk to the retailers and a lot of partners about, is that from my perspective, when I look at the last 18 months, what I've learned is that you can correct me if I'm wrong, is that payment is not anymore a commodity. If any of the retailers are thinking payment is just a commodity, they can get from checkout 1%, for example, and from any other company, they can get it like a 0.9. They'll go with that. I think they're missing that part, because I think it's becoming more of an experience commerce with payments, right? So I would love your view on this, because I think payment is more of the experience, rather than just a commodity to say, enter the credit card, enter ideal details, and just get the transaction done. But I think if you don't provide that, I think you're missing out. The conversion rate will drop, right? So I mean, I would love your
100%.
on this. Yeah.
No, I mean, the conversations we have with merchants, with retailers, like Christoph and other guys out there, right, is you're investing so much into your brand, you invest so much into your website, into the whole UX and flow, all the way through, capturing the customer, bringing to the site, taking them through, getting to put something in their basket, taking them all the way there, right? You've invested on the other side on kind of, the delivery that should be within one day, and the return service. And then, if the checkout bit fails, though, you don't even get to that bit. Like, all that investment kind of falls flat. So it is very much a commodity in there. You've got to make it work, all that investment to pay off. We've had clients where switching to us, so you start there, and there are different ways to bring value, right? Even in a domestic market, in a very closed environment, you're working with a provider who can bring your authorization rate up 1, 2, 3, 4, 5%, 6%. We've had clients, that's 6% more business, right? So there's, I think one of our previous reports, we had across 5 markets, I think UK, US, Germany, a couple of others in Europe. There was about 20 bill in lost from soft declines, right? Declines which could have been optimized, could have done, and I think about 12 bill of that was going to just competitors. So it failed on one site, I'm just going to go to the next site and your competitor's site and buy off there. So being able to optimize it by those, 1, 2, 3, 4, 5, 6% plus, it's lost business and lost revenue directly, and all the effort in kind of getting the customer at that point is gone. So very much so. And then actually, you talk about then expansion and growth. So you've got retailers who've come into the online space and now realizing, hey, even in my local market, even if I'm doing something there, there's something I could do better. And then you've got the retailers who then beginning to think beyond their domestic market and go kind of across. And I think when I started in payments, and even when I was actually in it for a while, but when I started looking beyond the UK, I was always like blown away, like, how do they pay in Germany? Like, there's still people paying with cash on delivery for e-commerce. Like, how does that work, right? And what's carte bancaire, and what's so for an idea, like, and we're all like 1 hour or 2 hours away from each other by train or by plane. It's everything's so close, but culturally so different, right? And it's amazing. So I think the retailers that Deepak you're talking about start bringing cross-border, and then they're realizing, hey, it's weird. Why are we not getting the same behaviors and demand for card in this market? So in the report we just released, I think it was about 60% of consumers said they're just going to like give up if they don't have the payment method that they want on checkout, that they walk away. Right, and there's I think about another 30% of consumers now are still say, now we're online. There's another 30% looking, hey, we're going to try out some new payment methods, whether that's a wallet, whether it's Google Apple Pay, whether that's a buy now pay later solution. So again, working with payment service providers to bring that, it's value, as you're saying, Deepak, right? So it's not even a failed transaction. It's before you get to failed transaction. It's the whole dreaded drop off at the checkout, which we kind of need to solve for, and so that's a good follow on, I guess, from that is what's your experiences? And I think, Christopher, you mentioned that initially there was cards and wire transfers, bread and butter, that's great for your customers, but now they're in there a little bit more comfortable, beginning to experiment and be curious with some of the other payment methods out there. Are you seeing that?
it's not like they are requesting it hard, you know. This kind of audience is taking it if you're offering it or leaving it. It's not like they are sending us emails and asking, of course, you know, the typical stuff back and forth is always there. But now what, maybe I could rather refer to another point you just mentioned 2 minutes ago, through that effects when we have the brand is very important. And what is important to us is that this expectation and goes along with the customer experience. And for example, when it comes to acceptance rates, this is the worst situation, you know, you can have. Imagine you are able to afford a watch in the 5-digit area. Yeah, this is not like a toothpaste purchase.
Nope.
This is months and months. I stated it in the case study, which went online recently. You know, this is a purchase that goes for months until you make the decision, until you find an item available. And that's how, say, you have to convince your wife or your husband that this is good, well spent money. And then at that point of the payment, it fails because something is not going through. That's such a sad moment. And this is the moment where you can lose a customer for good, or you can win him for the future. Because imagine, and for us, this is more important than the immediate business benefit and effect. Because when you lose that person, it's very hard to win him back. But if he's happy here, this is a returning customer, because people buying watches in that dimension usually not only own one item like that. And this, for us, to close the circle again, is at the moment the more important point, to get way better here. Not way better, we are not bad, but even better, we are good with your help. And we want to make this as good as possible, and then we move on to the next kinds of payments, because this is already covering so many user expectations. And so we want to make this job as perfect as it gets.
It's true. We talk a lot about alternative payment methods and wallets and things, but you know, let's not forget the vast majority is still kind of, you know, the traditional ones, the Visa and MasterCards. And actually, we have a question from Sonia online, so that's nice. And everyone, please do ask your questions. We are happy to chat about, and for any of us to chat about some of the things you're interested in. But as Sonia's asking, so Christoph, do you think Germany has benefited from the pandemic with regards to card payments? So card payments historically weren't necessarily that as dominant as they are in other markets. So have you seen a kind of a push and a greater adoption in card payments in Germany?
Yes. I cannot complete it with figures at the moment. I've seen numbers that it definitely got better, but my personal experience when I go to the grocery market, I hardly see cash when they check out. And I think this is again goes along with what I said initially, that people got familiar with the circumstances of online payments, with card payments, strong customer authentication, etc. So yes, the funny thing is, you know, the Germans are very crazy, and now at the beginning of the pandemic, everything with touching things, there might be Corona on it. You are laughing, but
I think everyone was quite crazy about that. Don't worry.
Yeah, but we saw watches being returned due to that reason. Oh, there might watches coming from Italy. There might be Corona on it. I refused the shipment. Seriously, that was an issue a bit more than a year ago. But this is an interesting discussion, and yes, Sonia, I do see an effect. We are not there where the US are or where the Scandinavians are, but way to go. But we're getting there, maybe.
Just before I come to Deepak, you on that, I'm kind of curious, because in the bigger ticket items, finance options, and I'm not sure, like a lot of the traditional buy now pay laters, the Klarnas out there, the Zips, the Quads, whatever, they actually tend to be not, but they're large ticket. They're not quite on Chrono24 scale. But have you guys had demand or looked at finance options, and do you think for the super large ticket, let's say, it's useful, or your customers are coming to you that they don't need finance?
Sorry, you asked me?
Yeah.
Oh,
yeah.
Oh, sorry. There is demand.
Okay.
And but I do think it's not really turning the game around. We do see installment payments in the US. We offer it only in the US.
Okay.
But it's funny. It's rather a backup payment solution in many cases, because we saw people using the installment payments when the card payment failed for any reason.
Well, that's I mean, I think we work with you guys on that, and we do advise other clients if there's a decline, and we pass the reason back, insufficient funds. We're kind of like, do you want to politely suggest they might need some credit or an installment feature, right? So that you're seeing that kind of in reality there in the US.
Yeah, but exactly. But it's the weird thing. It's for reasons when, for example, strong customer authentication is not working because it's not activated, and then people switch over, and we saw a shift back as soon as better the strong customer authentication was performing. So it was shifting back and forth a bit. But we see that. But for the high tickets, as you mentioned, it's simply not available. You cannot really.
I think there's solutions coming out there, but I think the ones kind of born out of Australia that have taken over the world, and Klarna, Capital Europe, they're kind of up to 500 quid. I think they're paying 3. But that's great, Christoph. I think Deepak, sorry, you've been quiet for a long time. But I kind of curious from your perspective. So
I was thinking about writing something about this thing, buy now pay later. Is it better for a consumer than a credit card, right? I mean, I personally think it is, right? I mean, it's certain demographic. If you can't pay it in a 30 days time with a credit card and all these type of things, the interest rate goes up and all. So this is, I always, when I speak to like Klarnas of the world, and also obviously they are your partner, always ask this question, that why the demographic for buy now pay later is still kind of a young demographic. Why the people like me has not adopted Klarna, when I know that my credit card bill would be, if I'll not pay on time, it's going to be different, right? So when I can split the payment, I don't have to worry about. So we work with a lot of, we work with Klarna, ZipPay, ClearPay, Afterpay, the Australian companies.
Lots of pays.
So many pays, and also now we are looking at some in Germany, some in France. There are so many. But the question is that what's different in each and every one, right? So that's the question, because when we can offer, working with you, we can offer all the payment, all the APMs, right? So working with checkout, but I just still can't get my head around to say why the demographics is not going up, like between 25 to 40, right? It's still stuck with this 18 to 25.
I don't know if that's fair. Deepak. I think we've got some Klarna people out on the call last time. We'd be jumping up and down, going desperate to say that's not true, right? I think I've been on some calls with them, and they'd be like, it's growing across demographics. It is increasing. I think it's growing in popularity, but I think I saw some stats in the US, like debit, card payments have shot up. But when you go drill down, it's actually all debit, and they're not taking credit, and that's kind of fueling the growth of the buy now pay later space. But I think it's a mixed bag. There's a lot of noise on the buy now pay later, a lot of calls for regulation. I think, do you know what? I think the fact that there's so many new entrants in that space is a little scary, because when you have one provider, like you're shopping everything through Zip or Klarna or QuadPay or Affirm or whoever it is, you can keep track because they keep track for you across the websites, right? But if I go for every different site and I've got different installments set up by 6 different providers, as a consumer, I'm just going to lose count and I'm going to start getting tripped up, or I'm going to end up, in debt. It's an interesting space. I think it's definitely got a massive attraction, and I think it helps consumers. But I'm really curious to see how it evolves over the coming year. Where we're going to see consolidation, because I think we are. Whenever we get kind of this whole new era of innovation and lots of companies jumping in, I think we're going to see some consolidation.
I completely, because my background is also worked in payment for a few years, right? So I was just thinking about, I used to work for PayPal, so it was very clear distinction, very clear proposition, right?
Yeah.
This is an alternative payment method, increase the transaction. There is no kind of a splitting the payment and all these things. You pay via PayPal balance and all that things, which is very clear. But I just still, I'm still figuring it out. What is the difference? Like paying 3 or paying 6, right? So what's the difference, right?
Or buy now, pay later, which is a different one, right? And you've got PayPal credit.
Yeah, it's just like it's the same concept, but I think it's in the luxury sector. I can see the value of this, but in terms of when I look at some of the kind of a daily use items as well, and I can just say that there is an option available now, buy now, pay later, which is kind of an interesting. It can increase the conversion, but we work with a lot of them. We are payment agnostic, right? So we want to give the options to the consumers and to the merchants to say whatever the payment options they can select.
Sure.
And that's what we look at.
It's a good thing, because I think, and from our research, I think 53% of consumers said they're planning to use some sort of buy now, pay later in the next 12 months. They've seen it, or their friends are using it. So, I think it's coming. The last thing I'll say on that one is, besides consolidation, there are a couple of players out there now who are doing it's almost a marketplace. It's almost, and that's really, really interesting for me as a little bit of a payments geek. If you didn't realize, from a merchant perspective, they say plug us in, and they can provide funding from actually Zip or a firm, and then actually just credit providers for the banks and whoever it is. And what they offer a merchant is, hey, with one button on your site, and we depending on the risk score, we could we're going to decline far fewer because we've got different lenders we can always pass the funds to. It's kind of like how you used to go to the credit rating agencies who kind of told you a credit rating and then said who best to get a credit card from, right? So here, but it's all through one experience with multiple kind of finance providers behind it, and they're also going to have different scales from kind of up to 200, 250, 500, and maybe even up to the 5 figures, for Chrono24 and the like. So I think that's really interesting. There's kind of finance marketplace kind of alternative to BNPLs coming in. Christoph?
Yeah, one thing I think, what I personally experienced that the growth of these buy now, pay later methods, I think it leads to a higher return rate because the challenge of people to ensure, do I really need it, or do I rather go for 3 and I keep the one I want to keep? It's there. You can order way easier now and just return things. Even if a credit card is a credit card and you can you get billed later on, it's different because you see it immediately, the effect. The moment you get charged, you get a notification that there's a charge on your card.
Yep.
So
and I also hate it, by the way, when I do that when my partner does that on the credit card, even though it's going to be returned apparently, right? But it's going to be it only goes the next month's bill, so I'm still paying it for this month's bill, and then next month it's only credited back then. So I don't like doing the credit card either.
Yeah, and then for us, returns are critical because a brand new luxury watch, which is sealed and everything, if it's returned, the warranty is already up and running, so it loses a lot of value for the merchant. And so you have to decide very sharply where you use this or where not. And yes, maybe in the sales you get a growth, but you also have to consider the returns, and so it has to be balanced in the end. And I think in some ways it works very well and it helps. Personally, I like it in sometimes, but when it comes to me as a responsible person for a luxury watch marketplace, I'm careful.
So,
Fair enough.
Moshe, are you one of the buy now pay later customer?
Oh God, me no. I'm a payments geek, but I study it, and I'm the opposite of an early adopter, or a late adopter, right? So I will study these things and then like kind of eventually be forced in the 21st century. But I think there was just another question from Sonia on like, isn't buy now pay later more expensive for us merchants and more risky? But I think Christoph, you kind of answered that, right? So there are times where it's good and it's good for the customer, but it's you got to balance that, right, with those risks that you were talking about and the expense. But if it drives returning customers, good. If it causes headache, not so good. So it's everything's with a balance. Conscious of time, so I'm going to wrap up. So very, very quickly, we're going to finish off with a thought. So Retailer Report also came up with 97% of e-commerce CEOs believe the industry needs to innovate in the business model to stay relevant and profitable and resilient for the coming 18 months. So guys, what's your top tip to innovate if you're going to give a message to an e-commerce merchant? I think guys who have been in the space already, let's not say someone new, they've been here, kind of they're doing business, but what would your top tip be to innovate to succeed in the next 18 months? Deepak, you first.
I think first start from the platform. So, like I have to make a sales pitch here, right? So you have to.
Of course you do.
You have to see whether you're on the right platform or not, because I think you just need to make sure that you have the platform which is scalable. Because this is, whether it's us or any other technology you use, it should be scalable. You should not be every 2 years or 3 years looking at re-platform, right? So, and the second thing is that you need to start thinking about, from my perspective, it's always been just a move away from a transactional business and just try to aspire, because otherwise you keep on having all the solutions available, sending into marketplaces, cut down on your margins. So I think move away from this transactional business and get into the aspirational business, just to build the loyalty. And just I request you, whether you select, whether you change the platform, payment is not a commodity, right? Just get it right. It is an experience, and if you don't get your payments right, it's going to be a challenge, right? You will see drop down in your conversion rate, low loyalty, and I've seen that in a number of stores. So I request, make a right selection on the platform and the payments, right? Shipping and all these things is also very important, but I think these two things has to match, and it brings success. So this is my view.
And anyone you particularly recommend for that? For the
I've been invited by checkout.com, right? So with all the full stack solution, and after that we are heading to a nice little place. Thank you very much for this.
That's cool. Well, you can come again. But Christoph, and your top tip for any e-commerce retailers out there, what do you think they need to focus on and do just to kind of keep growing the next 18 months?
Yeah, I hope my CEO is not a different opinion, because I don't follow it if innovating means turning it upside down. I think you have to analyze very sharply, especially when you look in the past 18 months, what happened and where came the effects from. And I think it's a continuously improvement that has to be done based on data we collected. And I'm rather the guy who wants to grow and get better continuously by going step by step, and not like just turning it upside down and
not innovating not for innovation for innovation's sake, right? It's got to be innovation for a reason, right?
Exactly. But
awesome. It's a good point, and we didn't touch on it, and I think we could do it on another talk. But yeah, I think a lot of that stuff, and I think we work with yourself and your team on the data there, on whether it's authorization data or decline reasons, or even the fees and the cost there, kind of optimizing that with the scheme. Data-driven analysis and innovation based on kind of logic and evidence. Definitely good tip, and we can help with that. So thank you so much, guys. It was a pleasure talking to you as always. For anyone else, the recording will be available online if you happen to miss it. And if you do have any questions for myself, for Christoph, for Deepak, please do send it through. And thank you very much for joining us. Take care. Bye-bye.